I'm Mortgage Mark. Let's talk about seller concessions or incentives. You can also hear them called like interested third party concessions, right? Here's what they mean. They mean when you're buying a house, if I'm the home buyer, or let's say you're the home buyer, a seller may say, hey, we'll give you X amount of dollars to put towards whatever you want. So a lot of times this is for new construction. Builders will often do this. Like, hey, we'll give you, I'm gonna use a big number, $20,000 to use as incentives, right? That $20,000 can go however truly you want to spend it. They're not gonna say, man, you have to spend it here, you have to do this. Now they may have some promos. If it's a builder, they may say, look, 10 of this is for like upgrades to the kitchen, fine, or upgrades to the house, that's different. But in terms of concessions for what's gonna go on the mortgage, on the piece of paper, at closing, the CD is gonna say like, here's 20 grand. That's yours to choose. Now where you're gonna find is on numbers this big, and by the way, 20 grand's not typical. When a seller offers money, a lot of times it's a couple thousand, but I'm gonna use the big example and say, let's say it's 20 grand that comes to you, the buyer. It can be used a variety of ways. So let's take some examples. Let's just pretend in this example that maybe the loan program that the home buyer's trying to get only allows for $12,000, not 20. Maybe it only allows, because there are limits. Every programs are gonna be different. But if it's $12,000 that the builder's allowed to give you on the mortgage part, so we can say you can use 12 grand. That 12 grand, let's say, I'm making up numbers here, 4 grand goes to closing cost. Cool, so that just takes 4 grand off the bottom line. The remainder of that 8, maybe use that to buy down your rate, right? But maybe say, let's instead of having a rate of X, we get X minus something. So maybe use a portion of it to buy down the rate, maybe use another portion to pay for closing cost. And then in my example, if I said it was 20 grand and 14 of it went towards the mortgage, well guys, you got 6 grand left. So you can go back to the builder and maybe say, cool, I'd love that outdoor fire pit and patio, whatever out there. And so that maybe that's the other 6 grand, or maybe just go to them and say, man, knock off 6 grand on the sales price. If they got it baked in, right? So if they give you 20 grand, they don't mind doing that. It's the same number, right? So again, you guys can just reach out to us if you have questions, but the money can go towards whatever you want. What it can't go towards, this is the one thing it cannot go towards. It can't go towards your down payment. So if somebody's buying a house for X and the down payment's gonna be, make it up a number, 50 grand, you can't say, I wanna use that builder's 20 grand for this. That's just, it doesn't work. You gotta come up with your own down payment. The third party, the sellers cannot pay for your down payment. That's the one no-no. Everything else can be used for whatever you want. So if you guys need help or want to talk about how it can structure for you, you can find us at mortgagemark.com, call us, email us, whatever you want to do. We'd love to help. And remember, when you think mortgage, think Mark.